This is Eric Mwathe with Mwathe.com, and like I promised, we are taking a look at TDC, and just wanted to show you what I was looking at when I said I think around this price here, about 57.50, it might potentially see a stall. Now, as far as the stock is concerned, from just from its own look and feel with outside of the market sentiment, stock has been having a great breakouts, and actually, unlike the market, it's still close to its highs. So here we see the lines I'm drawing just represent the levels in which the stock broke out, and this is all in hindsight. This is one that I missed, so I never had a chance to to issue this as a buy alert, but it looks like a good stock. My only feeling about the stock at this time is, first and foremost, like I said, I think the market is in a tricky environment, and I'm just gonna play around with the arrows just to show you some of the entry points. So the stock broke out. Okay, and the most recent one here about 2 weeks ago. Anyway, so as far as the stock is concerned, from a breakout perspective, I would rather own this stock over, let's say, Goldman Sachs, which is trading near lows. Let me see whether I can show that. But anyway, before I do that, I'll show that in a second. But as far as the stock breaking out to new highs, it's trading on a breakout level from September of 2010, from about $33, now trading in the higher 50s. That's a good gain in a market that has peaked. Market peaked around May, so beginning of May, somewhere around here. But while the market was going down, seems like this stock TDC was going higher, so it's got a good relative strength. And just to show you what the other technicals look like, you see the RSI is looking good, moving above 69.10, which is good. The RSI is healthy. Volume has been expanding as the stock has moved higher the last 3 weeks, which is good. Actually, the breakout seems to have happened about 3 weeks ago. If we draw a nice area showing, oops, so that I can fix that. So it broke out here about 3 weeks ago. All right, volume looks good. One thing I was telling you, because this indicator here is one that shows you this right here is behavior of a stock relative to the S&P 500, and as you can see, because this market has been going down, market's been going down since May, while TDC on the other hand has been going higher. That means that this stock has had, this line here shows a relative strength. So relative strength for TDC has gone high as the stock has outperformed the market. And again, in earlier chart analysis, or going back in the early 2000s, 2001, 2003, we used to add this as part of our requirement, that we wanted our stock to break out, just like it did here, break out on the relative strength versus the S&P 500, because that tells you that the stock is stronger than the market. And that still might hold true today, even though I don't really put too much emphasis in it. But it's always a good thing to see how your stock is performing relative to the entire market. Always a good thing, because that tells you that you are holding a powerful stock. But anyway, so that's the look and feel for the relative strength index versus the S&P 500. And now we are looking at the MACDs, and the MACDs also, are still closer to their highs, especially the main MACD, which is this is the main MACD used by most people, the 12, the 26, and the 9. Really, you don't have to understand why those numbers are there, but it's just the MACD. That's the setting that most people use. And the other setting, just so you know, is one that I created for some reason. Seems to played around with the numbers years ago, and it seems to give us an early signal. But this is the main MACD. If somebody talks of MACD without telling you what the parameters are, this is what they're talking about. So that's the look on the TDC. On the weekly, looks great. Now let's take a look at the, so again, as a stock pick on its own, it looks great. Now I'm gonna take a look at the monthly, which is probably the most important parameter that I look for, and I love that it's breaking out right there this month of June 2011. It's breaking out right there to new highs, and it's probably the first breakout after a rest. It had a lower close here, red bar. This was a lower close right there for the first time, negative closing in the month of May for the first time, going back about, we see 1 2 3 4 5 6 7 8 9 10 months ago, and that's the first breakout. The last monthly breakout was around these levels here when it broke out right there, about August of last year, 2010. Now this is a first breakout in many months, so yes, in itself that's a good thing. In fact, to be very honest, if I was given, and I'll show you some stocks, just some of the common stocks in the market, this one honestly looks good. It's breaking out after a 1 month rest. What's there not to like? The buy point was this highest monthly close in April, which probably would be about 56. But the stock looks good. The only reason why I thought TDC probably we should hold and not buy it here is my observation that even as the price, and this is called a negative divergence. Negative divergence is you see the stock is making new highs, a new high in price. Unfortunately, the relative strength index as of right now is not following through, so we have a lower relative strength index. That makes me a little bit uncomfortable about the stock. You never want to see a stock that makes, you never want to see a situation where stock is making a new high in price, but the technicals are not corresponding. That makes me not very confident. I would say, given the fact that I personally think the market seems to be a little bit shaky around here, I don't want to jump into stocks that have that kind of look and feel. Also, you'll notice the MACD seem to be doing the same thing. Again, the MACD also confirming that it's not moving higher here. The technicals are not corresponding to the price gain. That's what they call a negative divergence. In other words, price is moving in one way, but the technicals are not. For that reason, I think TDC, we can hold off holding TDC. Now, honestly, if I was forced to buy a stock here, I'll probably buy this one just because the monthly looks great. We got a great monthly view on this one, and the weekly is also okay. This is a perfect ultimate Muade breakout. The RSI is at at least 3-year highs. That's awesome. Again, if I was forced to buy a stock and hold it for a couple of months, I would definitely not have a problem owning this stock. Especially when you look at some of the stocks. For example, if you take a look at Goldman Sachs here, I would rather own TDC over Goldman Sachs, because Goldman Sachs seems to be breaking to new 52-week close, very close, if not at 52-week close right there. That's going to be the lowest trade in Goldman Sachs going back to May of 2009. This is a 3-year monthly. So I would not want to hold a stock like this one compared to TDC. Bank of America is up today. See what it's doing. Again, you see it's already trading below critical levels. I would bring it closer to a 52-week low, somewhere around there. So I would rather own stocks that are making new highs. Today Microsoft is making a strong push. Again, I would rather not own this one just based on the fact that it's trading below its moving averages. You always want to own a stock. For example, when Microsoft was moving above this area here, moving above the trend lines here, above this the moving averages, this moving average and that moving average, the stock, you'd rather own a stock when it's trading above the moving averages because you see it had this nice move. But when the stock is trading below the moving averages like it did here, it's never a good time to own a stock. Like even right now, it's trading below those moving averages. It means it doesn't have momentum. And any kind of movement, like right now, if I take a look at the daily, you'll notice it's moving high. I mean, it has a nice day at a 4%, a 3.9% gain on Microsoft on any given day is a big move. But really nothing that inspires me. And to be very honest, I see, for example, if I just draw a line here connecting the lows, you see Microsoft broke down. See if I can show that. Broke down here. If we extend that line, you'll notice that this area where it broke down is where it's coming to test. In other words, this is where it started really cascading. Started cascading around here, big drop, and so it's coming back to this general area here and testing it. So I would not say it's a buy at any given point. Also, there's going to be resistance when it tries to move above this declining top lines. This is just a line connecting the highest close here, the highest close here, and now it's back at the highest close. So that is going to be a natural area of resistance. So I would rather own TDC over these other stocks, just based on that one fact. If I take a look at the 60-minute on Microsoft, again, earlier I'd noticed that this is an area where it might stall, especially as shown on the day as I showed you on the daily. That shows that this market, it's probably peaking out. But what I'm saying is, irrespective of the negative divergence on TDC, I would rather own TDC over any other stock that I just mentioned right now. So I hope that helps you. TDC was a good find, and even though you mentioned you found that just from your day-to-day work, it doesn't really matter. The bottom line is it's a great chart on TDC. I would rather own that, but I think right now I would not be in a hurry to own it. Probably if it ever breaks out above that negative divergence where the price makes a new high and the technicals follow. Eric Moather with Moather.com for the mentorship program. Peace and blessings.